is Chris Baker with Baker DMM, and this is our video coaching newsletter. Topic of today's newsletter is going to be having a system in place to review your financial data. And before we jump into our discussion, I want to read you a quote that I wrote. And the quote states, "The best companies in the world are reviewing their financial position every day, every week, every month, every quarter, and every year. Any person or business needs to be doing the same thing on a regular basis to make sure they are making the most out of their personal finances. And if you're not or cannot for whatever reason, you need to be hiring someone to do it for you." And really, in this newsletter, I wanted to talk about a few examples. Actually, a couple relate to where I used to live. In my old neighborhood, I was actually the treasurer on the Homeowners Association committee. And the other two examples relate actually to clients that we've had here at Baker DMM. And I think they're great, quick, easy illustrations of when you're able to have your finances organized and you have a dashboard or a financial system, a financial report in place, you can then start to understand your position and where your money is and where it's going and what you've been doing with it. And the unfortunate problem is that so many people try to keep everything in their head. And I think statistically, one of the most recent statistics I read is that maybe barely, I think 40 to 50% of our country actually budgets, of the individuals in our country. And that's from 18, all the way up to 100 years old. So, one out of two people aren't budgeting, and that's not good. I mean, you gotta know your position to make informed decisions. Now, I mean, that's a big part of the battle. The other half is, controlling your habits and then actually taking that data and having the discipline, self-control to manage your spending habits. But that's a topic for another newsletter. So, going back to my old community HOA, I think I moved there in 2009, and in the first couple of years, there was a board that was elected, and a lot of the residents, over those 2 years, were not really happy with the way that the community was running. And there's a handful of neighbors and residents in particular that were very concerned about not only the management of the physical grounds but the management of the finances. And so in 2011, a new board was elected, and I was one of the individuals that was elected to the board. And I was the treasurer, and the other person, the president in particular, pretty early on, we worked with the management company. We started gathering our financial data, gathering our financial statements, and we, to gauge where we were and try to understand, where our money was going. We knew we had money coming in, but then we knew we had quite a bit going out, and we weren't quite sure where it was going. And pretty soon after that, we realized, one thing in particular was our utility bill for the entire building. I mean, our utility bill was outrageously high. And when we compared it to other buildings in our town and around where we lived, we noticed that we were typically higher than most of these other buildings. And when we dug in a little bit further, we started to realize, well, we leave lights on. There are various lights throughout the building that are left on all the time. We're not using the most energy efficient light bulbs. So we started saying, okay, we're going to have all the lights cut off. We're going to start using better light bulbs. And within a year, we were able to effectively reduce our power bill over $25,000 because we just started keeping an eye on where things were and making those adjustments, working with the management company to make improvements to our building. Another key area was the employees that worked at the building, because we had a management company and they had a front desk staff and they had a property manager. And all these different people, some people were part-time, some people were full-time. We had a lot of, 10 to 20 different people working in our building throughout the month. And, one thing I did was I just calculated the salaries and what we were paying these people and started tracking it month to month. And, pretty quickly on, even looking back in time. And then as I started gathering my own data, I started realizing, wow, our bill is pretty high. What was this for? How many people worked here this month? How many hours did they work? And pretty soon after that, in working with the management company, there was some overbilling here and there. Maybe some people had some overtime they shouldn't have had. Maybe we paid additional fees that we shouldn't have had. And through really honing in and watching that, it forced the management company to tighten up their ship. And within 6 months to a year, our bills started going down. And on average, it was roughly about almost $4,000 to $5,000 less on an annualized basis than the previous year. So because the management company knew we were watching, we started getting roughly $4,000 to $5,000 per month in reduced fees. And I think, roughly in the end, annualized, it was about $50,000 that was saving our community. So those were a couple of examples from the HOA I worked on a few years ago. And then, more recently, specifically to a couple of clients that we've worked with. One in particular was a doctor, and he, very busy, brilliant individual, very busy, one of the best at what he does. And he didn't have the time really to get organized and to review his financial position, where his money was going and what it was doing for him. And again, we started working with this guy, and pretty early on, a couple months, we start saying, okay, what bills do you have? What obligations do you have every month? What's your rent or your mortgage? What are your car payments if you have them? What's the activity? And we realized, he was paying a few $1,000s in rent, a couple $1,000s in car leases and car payments. And for someone that never really stopped to think about it, because to be quite honest, his cash flow is such that he really didn't have to think about it. Making well over a few $100,000 a year, it just never really occurred to him. It's like, well, I've got the money, let's just sign me up. But in analyzing that and getting financial statements in place and looking at the numbers, we were able to talk to him and say, hey, look, you've got money going here and here. Why not pull back and maybe go buy a home, or maybe find cheaper rent, renegotiate your car, get rid of one of the cars, make adjustments to the habits and look for better deals. Maybe we shop around. Maybe we've got one deal that's charging $1,000 a month. Maybe we can bid that out, and maybe we can find someone providing a service for $500. So we did that, and it's pretty amazing because it was a really easy win for us to help the client. And if you do the time value of money, like this particular person, let's just say they were 45, and they want to be a millionaire when they get to retirement. They have minimal savings now, and they want to get to be a millionaire. Well, if you go look at the historical rates of return, of the market, and if you can help this person save $2,000 a month, and if you're making $20,000 a month, that should be fairly manageable with some tweaks and adjustments to your lifestyle. Saving $2,000 a month, let's say your average rate of return 6-7%, you do that over 20 years, well, that person is easily going to be a millionaire by the time they get to 65. Now that's a pretty high level example, but and not everybody's going to have that kind of cash flow, but the point of it is to illustrate, keeping an eye on your money, understanding where it's going can help you make adjustments. Another example, we had a client, a couple that they were seniors, they're early mid-80s, and they have a daughter that lives at home. They had, I think, 4 pets at the time. Now I think they have 2. We worked with this person for a few years, but the financial planner that worked with them initially was very concerned about their spending, because their budget, let's just say it was $5,000 a month. The financial advisor was going to send them money every month as retirement income, but they were on average spending $8,000. So that's almost $3,000 over their budgeted amount. And the financial advisor was concerned that these people, their life expectancy is mid-late 90s, and at the rate of their spending, they're going to spend through their assets before their life expectancy's up. So we knew each other. He connected me to them and said, look, whenever we meet, they come in with their budget on a napkin. I say, where's your money going? They say, well, we think money's going to the groceries, we think money's going to utilities, and we think money's going to the mortgage. But this guy really never knew. He never was on that side where the expenses were going. So we came in, started getting him organized, started tracking, understanding where the money was going. And one thing that we noticed, I mean, they were spending over $1,500 a month on groceries, almost $2,000 a month on groceries. And I can tell you right now, after analyzing that and presenting it to them, here we are a few years later, they've worked on it, the client's done their part, we've done our part, and now they spend maybe $1,000 a month. So that's $1,000 a month that they're saving by buying less groceries because now they're aware of it. Another big hit they were having were bank fees. When we first started working with them, when I first analyzed their position and did a 3 to 4 month look back, on average they were spending over $250 a month on bank fees because the timing of their income didn't match up with their expenses, and therefore they were getting knocked tons of late charges, overdraft charges. And if you don't know, the banking industry, their overdraft business, I think it's like a $32 billion a year industry. So the banks make $32 billion a year, roughly. That's statistic might be a year too old, but they make $32 billion per year on overdraft charges. I mean, that's unbelievable that people, are not timing, their income and their expenses properly. It's just wasted money, which is very unfortunate. So, in the end, the problem is financial organization, understanding your position. The solution is that you need to have something, a way to do that. You need to have, whether it's QuickBooks, Quicken, Prosper Daily, Mint.com, there's a lot of different online tools now, a lot of phone apps, even the banks now are getting on board to track your money. You got to have a system in place where you can get all of your accounts, and you need to be able to monitoring that. Of course, that's half the battle. The other half is your discipline and your accountability to yourself to spend your money the way that it should be spent. But the first thing is you got to be organized. All the big companies, all the Fortune 100, 500,000, these people, they're very, very well-run companies. They're doing it all the time, every day, every minute of every day, and you as an individual need to do the same thing. So if you found this video helpful or of value, please feel free to share it on in all of your social media networks. Share it with your family, your friends, or whoever you think might benefit. If you ever have a question for me personally that you'd like for me to try to answer, you can email me and keep it to about 1 to 2 paragraphs, under maybe 300 to 400 words, and I'll try to answer your question in one of our newsletters. And if you'd like to request my help personally, the quickest way is to go to our website, www.bakerdmm.com, scroll to the top, click on Request an Appointment, fill out your information, and I'll reach out, hit send, and I'll reach out to you in about 24 to 48 hours to schedule some time. And until then, I will talk to you all soon. Thanks.